Hey everyone, it's Anthony Venuto from In Touch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about some of the changes that are coming down for mortgage regulations and discussions that are happening with the re-elected government that's in power. Let's go inside and talk a little bit more. With the re-elected federal government, they are going to be tasked now with the journey and the job of making sure that they can deliver on their election promises. And part of their election promises were making housing and real estate more affordable for many Canadians looking to get into the market. So if you're a first-time home buyer or existing home buyer or new to Canada looking to get into the market, the Liberal agenda is going to be something you're going to want to pay attention to in the coming months of how they unravel and basically committing to their platforms and making things more affordable for Canadians. Now, the purpose of these videos, our Finance Friday videos, is to discuss the changes that are going to be happening, things to look out for if you're a consumer or a first-time home buyer or an existing home buyer, someone looking to get into the market. What information can you take away to help you make a better and informed decision on the biggest decision of purchasing a home in Canada? So, let's look at some of the things that we're seeing happening in the marketplace right now. Now, first and foremost, in the mortgage marketplace, there has been an increased high debt level of mortgage debt. So mortgage indebtedness is actually something that is of a concern to not only the banks, to the regulators, as well as to the Bank of Canada. It's understanding exactly what they're going to do to make some of these changes. And that's not something that was in the platform, but it's something that they do need to address in order to make sure that we can continue to see a resilient real estate market. What's going to happen is, generally from my experience, and obviously this is my opinion, is when we start to see things like this sort of get out of control for many people, the government is going to have to step in or mediate. Regulatory bodies or banks or someone's going to have to make some changes in order to, pull back on credit, lending and so on. So we don't know exactly how that's going to happen, if it's going to be directed to first-time home buyers or existing homeowners or refinances or investors, but it is something to pay attention to that we do see potentially coming in maybe 2021 or into 2022, depending on what happens next. So the other important thing and the purpose of this video, and why you're watching it most likely, is because we were talking about first-time home buyers or existing home buyers and mortgage default insurance companies going up and increasing their thresholds. So right now, if you're purchasing a home with less than 20% down, the maximum purchase price that you can qualify for, no matter how much money you make, if you don't have 20% down, it is $1 million. That is the purchase price cap right now. Now, if you're looking to purchase a home that is over $1 million, you would basically be having to put 20% down. Now, for many Canadians, that is something that's going to be a very much of a challenge, depending on your financial situation. Most Canadians who look for insured mortgages have to buy a home that is below $1 million and do have to fit the qualification, like any Canadian purchasing home, the stress test rules, income, credit, down payment, all of that has to be verified. The proposition on the table right now with Canadian Mortgage and Housing Corporation is that they want to increase the $1 million threshold to 1.250, so $1,250,000. Basically a 25% jump from where we are right now, which is actually in line with prices that we're seeing in some of the major cities. So if you're in Toronto or Vancouver, the average home price is going to be tipping in the $1 million plus mark, especially with multiple offers and bidding wars. So this is going to give people that are eligible to and qualify to put less than 20% down to purchase a home at the top end of 1.25 million, which is very good. However, from our opinion, in my specific professional opinion, when you start to do and increase the amount of people that can be in the market, you're going to drive the market up. You're going to have more people competing in homes that previously were not eligible to compete in, which is going to further drive prices up, in my opinion. Because if you only had a amount of people or a bucket of people that could qualify with their current situation with less than 20% down at $1 million, it was holding them into that bracket. Now, if you open it up to another $250,000, it's great for people that qualify and that can give people that home, but you're also going to be competing against people that had 20% down and are looking to buy a home at 1.25 million or maybe a little bit less, right? That's what's going to happen now, is because we're in the fall market right now and we're still seeing very limited supply, and the homes that are being put on the market are generally over the $1 million mark. So now you've opened up that capacity for others to be in that same market, competing against people that have maybe deeper pockets, maybe in a financially different situation. Maybe they've sold their home and have a very large chunk of money to put down as a down payment, as opposed to the first-time home buyer that's trying to just put enough money down to qualify for that home. So these are things to consider, and why we're having this discussion and why we would have this conversation with our first-time home buyers and clients is to get them prepared for either making that decision to maybe get into the market before the changes happen so that they can find themselves a home, because those homes that are going to be priced at $1 million may be priced out more when it comes to multiple offers, because now you have more buyers looking at their higher end budget and are going to fall in maybe lower. So maybe you qualify for 1.25, but maybe you're looking for 1.1. And maybe that is the buyer that was looking to buy a home. Now that inventory might take, that inventory might not sit on the market a lot longer. It might be a lot shorter. There's going to be more demand. Obviously, those are opinions that we hold, and having conversations with other professionals in the industry, as well as real estate agents and analysts. You read the news. There's going to be a lot of conversation about this in the coming months, and only time will tell, obviously, what's going to happen once it's rolled out. But we want to keep everybody informed and help you understand our perspective on what we see when we talk about changes and what it could mean for you. So if you found this video helpful, please feel free to share it. Give us a like, DM us if you have a comment or question or concern, and always feel free to reach out to us at InTouch Mortgage Solutions if you have any questions. We wish you a great Friday and an excellent weekend ahead. Thank you for tuning in.